So let's see, where's my clean chart? Is it my clean chart? Yeah. Anywho, so what I wanted to do, especially going to the weekend, especially since we're crabbing right now and we got about 25 minutes before Powell speaks, in which case we could be having some more volatility. I kind of am interested in, going over the swing stuff again, especially since talking about high to low and then isolating reversals. So for me, things that are important, like if I have, the swings on the auto charting, I usually keep it around 5. If I'm only looking for the most major swings, I'll lower that. But generally, just to see, the major swings, and it catches them because I put it on bodies. So essentially, swing fail, short, continuation. What do we have to the downside? Is that a swing test? No, even front ran that. So what I'm looking for mostly when I look at swings, we talk about high the swing, low the swing, and this can be more of a refresher for some people. But generally, we'll just use this as kind of a, you know, just double tap to make sure we're all on the same page. So when you have major levels, when you have major, down moves and up moves, you get swings. So with these swings, you look at each individual candle, and you basically say, well, where's the low in the zone? Well, it's there. Let me change my box to and turn that off. So that's our low, right? We'll include the wicks for now, just so we can isolate the things. But where's the previous high that we're at? It's there. The reason these things are important is because when you have reversals at highs and lows, you're seeing a change in control between supply and demand, right? So supply essentially, think macroeconomics, just Google supply and demand curve. It makes very much sense. Essentially, all that happens here is that volume and buys for longs overtook bears, and bearish volume died out and couldn't hold the downside move. And the opposite is true here. The reason these levels become important for testing is that essentially each time we create a level, like to the downside, right? What do we get? We get a demand zone. We've created a reversal structure with a demand zone. How about here? Do we have a supply zone? Yes, that's a reversal. So with these levels, we treat them the same way as I would say plotting the weekly and monthly SRs. I look for bullish and bearish engulfing candles. When you see bullish and bearish engulfing candles, you see some major structure for retests. Now, I used to plot a lot of things like demand zones and supply zones, and I can kind of talk about that real quick. But essentially, what you have in this zone is that you've created demand that essentially goes in and around this candle from the low of the candle and the high of the candle, in the same way we do it in the supply zone where we have a reversal back down. So taking that as it is, we'll go ahead and plot essentially the high and the low of each swing. So to find the high and the low of each swing, you say which candle was the absolute high, which candle was the absolute low. And the body of that candle, the body that did that, is going to be very important, as is essentially the next candle to it. So if we're going a reversal to the upside, right, we want this to be the bullish candle, which it is, right? What matters is the candle directly to the left of it as far as body. If we're going to the downside, right, we want the downside to have a strong bearish candle, which it did. We care about that candle. Now, sometimes you'll see the candle won't be the same as the low or same as the high. But anytime you have, the candle that's right next to that has the lowest body, essentially the smallest body, the reason that's important is that shows where the change was made, essentially. That almost like looking at it as a doji perspective or whatever. Essentially, like that's the candle that the change was made in. The fact that we wicked down, we closed back, bullishly, creating good structure. Even though we wicked to the downside, we had a continuation. Same thing here. We closed pretty poorly, and then the downside was a continuation down. So the reason we isolate these levels is to look for the next level of a reversal. So how do we look at the next level reversal? Let's plot the demand zones, or the high and the low of it. That is the high of the candle. Why is that the high when it's below? Well, because price is moving to the downside, right? When price is moving to the downside, we think of price in the direction of travel, because it's easier to remember high of the candle, low of the candle, when you're talking about probability of reversal. So when we go to the upside, right, we have upside movement into a supply zone. What does that tell you? It tells you that that's the point of reversal, and we care about the body of the candle. So if that's the high candle, the high of the zone or high of the swing, conversely, the high of the swing, since price is going up, is to the upside. So the high of the swing is always in relation to the direction of movement, because when you're testing a structure, when you test things like the high of the swing and the low of the swing, and we'll plot those real quick, there's a difference in probability. When you have reversals at the low of the swing, regardless of which direction you're traveling in, this is why it's easy to remember. When you have rejections at the low of the swing, you have a high chance of reversal. Comparatively, when you have a rejection at the high of the swing, you have a lower chance of reversal. So in an example shown here, right? Let's look at this structure and let's look a little bit lower time frame. But does that make sense? Do people understand like why we're taking it in high of the swing, low of the swing, and direction of travel? Because that way you remember, if it tests the high of the swing, it's a lower chance of reversal. If it tests the low of the swing, and only that, then it's a very high chance of reversal. And that's basically the rule. And you're looking for those higher chance of reversals, right? So what do we have here? Like let's start with the one of the low here, right? That's pretty simple. We create a low, pop back above. What do? How do we trade the level? Well, the buyback in this area is very strong, very hard to long just on this move. You could have essentially used stuff like this to say, well, we closed the MDVD, the volume in that candle was incredibly bullish. And because the majority of the volume was below where the candle closed, there's a pretty good probability of an upside continuation, if that makes sense, right? And this is where it comes to using your tools. And if we go lower time frame, we might actually be able to see if there's a 15-minute reversal or something. Right? Did we even get that? No, it essentially tapped it, or not even. I'm on what am I on? I'm on Binance Perp, so we couldn't even get to it. We tested the little bits at the top, so you could have potentially longed it. It would have been a harder long. I would probably not have taken it, and I didn't. So whenever you see that, you're immediately saying, well, the low of the swing of the true downside move on the 4-hour isn't tested. And the reason we're looking at 4 hours and higher is because these are the levels that are most important on the chart, right? And why, like when I talked about it on the stream today, why do you think I longed this level? Well, because that's the untested low of the swing. That's where I want to see major reversal. If we come all the way to the high of the swing, my stop was very tight. And if we had gone past the high of the swing, I wanted to protect myself in case we didn't get the bounce. I ended up getting a much bigger risk reward than I was expecting, which was, hey, it is what it is. But it's only like a $30 difference between the two. So perfect test of the low of the swing, bounce back up, and now we're starting to see some failure. But again, what have we tested? That's always the question. So if we understand that of the low of the swing and why we came back down to that level and why the bounce back and the buyback was so strong, that's why. If it had tested the high of the swing and come all the way down here, it would have been a less chance of a bounce. I would have probably been looking for some type of price action that went like this, or maybe even just came there and then came back down to it. And that's usually very indicative of the strength of something, right? To the upside, right? We have the high that's created in the zone. The high of the swing is tested, but we don't close above the high of the swing. You see it even on the 4-hour. That's very important in the structure. Yeah, we're popping above. We're popping above. When you start seeing consecutive, pops into zones that are sold back into a level, your first thought needs to be saying, well, people are getting entered on shorts here. Market makers are entering on shorts. Whales are. Why? Because they're able to restrict the price back to the previous level. Here it would have been harder to short, like I said. Here, when we were actually starting to fail and made some lower levels started failing, we were on the stream yesterday for the guys who were with us. We talked about the fact that we did that at the start of the stream, right? We popped up on the 16, we wicked all the way back down, and by the time we closed this and then opened this 1 hour, it was done. You could have also taken that as a 4 hour trade, which was essentially that low. That's now failing the entire upside of the entire structure. So whenever you see this stuff and you start seeing like, well, we failed, where do we go? We went right back to the high of it, failed at the levels. Again, it tested the high of the swing, lower chance of reversal, but we also see that this is the major restriction. So not only did we test it, 3 times, we tested it like 4, 5, 6, 7, 8, 9, 10, 11 times, and it still failed it. So what does that tell you? It tells you that 27.50, 27.5 to about 27.4 is the major reversal zone that we want to gain. If we gain 27.5, we should have a massive move to the upside, because whatever is in here as far as shorts, they're holding everything to the downside. So again, that's an example of a really good one that we just had, and these things will continue to repeat and replay. I promise you, because when you find the low and the high in the area, these become your targets for reversal. Because most of the time, Bitcoin is ranging and not trending. Most things range about 70-75% of the time compared to trending. When they're trending, the high time frame trend, that's what you look at. Where are we doing on the high time frame? Are we trending to the downside? Yeah, of course we are. We're failing and have been failing since mid-April. So where's the priority higher time frame? To the downside. What are we potentially doing now that's changing things? Well, we're potentially putting a higher low. What do we want to see? We want to see a higher high. What do we want to see gain back, essentially? Gaining back the structure that we lost that led us to the downside. Right? What is this swing level here, the high of the swing? Why is that also important if you look to the left? It's also failing structure. It's failing what essentially was support. Even below it, it's failing support, not cleanly, but it's still doing it, still failing. And that's what we look for as far as swing structure. So when we go lower time frame, we can actually start making actionable stuff as far as lows and highs and tests and whatnot. So would you argue that this high of the swing is fully tested? Yeah, I would. What's the next level now? What's the next high that's local? What happens if we gain this stuff? It's done, right? So looking at the 1 hour, what do we have? We have the failure back down. Is it respective of the 1 hour time frame? Yes. What are we looking at? Shorts of this level that failed to gain it. How about playing out on something like the volume delta? Bearish candle closed there. Bearish volume closes here, pops up, is sold back down. How about a lower time frame? Even on the 15-minute, it tests the low of the swing. The majority of the volume is there above the candle. By the time it closes, there was no holding it. Even though the next candle was a bullish candle, the priority was broken once it broke the high time frame swing. And not always will that be the case. There will be times we'll reverse against you regardless of where the volume is, depending on your time frame. So if you're doing the lower time frames, 15-minute, 3-minute, 1-minute stuff, make sure that it plays out on the 1 hour and the 4 hour. Because if you don't, it's going to hurt you. That's usually the way the thing works, because people get tunnel vision. They want to take 20 trades a day and make 30% profit, and then that's their trading done for the day. It's not how that works. Like if you make 30% a day consistently, DM me. Shit, that's amazing. But you're probably way out of bounds regarding your risk profile. And that's me. So again, talking about the highs that we created, by the time we made that 4 hour close, we talked about it yesterday on the stream. By the time that 4 hour was closed down there, it was done. It was easily shortable for continuation move down. Currently, what happened with the next buyback? Well, again, a nice example of a lot of bearish volume out of position. Move back up. We're now stagnating and sideways. Quite a bit of indecision, probably leading up until the next 10 minutes when we have the stuff from Powell. But so just about the swings and that stuff, understanding high of the swing, low of the swing. Are there any questions? And I know we don't talk about it enough, but this is essentially the most important part of price action trading. Yeah, we use the indicators as confluence. Yeah, we use all these different things that help us out, right? Even on the 15-minute, we got this stuff. 15-minute time frame. We got MDVD on. We see failure here, pop back up, lower highs, failure, moving back to the downside, essentially losing the volume, the point of the control, which is also the high of the swing, low of the swing. We're now at the volume node. We're bearishly back testing the daily. It doesn't look great. And we've got some little, 15-minute bearish divergence. It doesn't have to play out, but, they do help. And it shows quite a bit of momentum because crypto, by and large, uses momentum and price action, especially on lower capped coins. Let me just check the chat. If anybody put anything in the fireside. So any questions on the swing stuff? Open table. It is what it is. There's no dumb questions. Four hour and up. Yeah. The 4 hour is the king for two reasons. It's low enough time frame to where you can make highly actionable trades within a day. And at the same time, you can also have an understanding of the overall trend. If you're taking longs, where's the only place you could long? You could long at the low of the swing, which we did last night. That's why I posted in the chat last night. It's like, that's the only place you could long it, because if it loses that, it's a continuation of the downside trend. That's it. It's still potentially failing, right? It still hasn't made a new high. And that's what you need. You need a higher low and a higher high consecutively to break a downside trend. And until we get that, it doesn't look great. We've been in a downside trend since mid-April for over a month now, right? So once we broke that, made the low, that low was sketchy, came back up, failed to retest anything bullishly. It was so weak it couldn't even test the swing back. So yeah, that's the 4 hour trading on spot. That's the fastest way to profitability long term. Because if you trade on 4 hour, you trade on like 1x leverage if you don't want to hold bags of anything. 1x leverage, the least amount of exposure possible to a trade, and you're for two reasons. You're looking at your percentage gain, right? If you're looking at your percentage gain, you're now thinking, well, if I'm trading, it's a very different feeling the first time you trade with a couple like 10, 20, 30K comparatively when you're trading with like $1 or $10 or whatever. And the way to keep yourself from getting psyched out, because a lot of people will go into the higher risk plays because it's a lot, 10K is a lot of money. $1,000 is a lot of money. $100 is a lot of money. It's the way to keep that in perspective to say, well, okay, I'm risking 1% of my capital at a 1x leverage while I'm learning to trade on 4 hour and spot, isolating good moves. I make the entry. Where's my stop loss? Some measured move underneath the not measured move, but measured percentage underneath the actual level we want to hold, right? Something like 50.5, 0.6%, really tight stops. That way I can re-enter the trade several times. What's my first target? The previous low that was put in. What's my next target? Major levels. So 2 profit targets, maybe 30%, 35% out of the trade. My stop loss is now in profit. And now, and that's my system. Profit target 2 hit, my stop loss is in profit, regardless of what's happening, regardless if I get stopped out, because now I've done 2 things. My risk to my account, if I'm trading 1% of my capital, is gone. I have a 0% risk on my entire capital. And that's the important thing, because now you have a profitable position that you've already made money off of and realized gains, even if it's a low percentage, even if it's just 1% of $10 or $100, whatever it is, you're still trading and making a percentage move and percentage profit. And that should be the focus, because once you do this for a couple of months and get really, really solid with your TA, you become an assassin on the higher time frames. You start to realize that the higher time frames move almost no differently from the lower time frames. The only difference being is that, I'm on the 4 hour here and it's not moving. There's nothing moving in this zone, right? It's dead. It's just running flat because everyone's waiting for Powell. But if I go down to the 1 minute, then I adjust it for size, we have these massive moves that fill out the screen. It's like, oh my goodness, we're failing, 0.5% in, 30 minutes. Like, that's crazy. And that's what happens to most people. But realistically, this trade's no different. There's going to be entire areas where there's very low volume. but mostly nothing really changes as far as swing structure. Nothing changes. Oh, trading like what? Oh, on here, because I'm trading on the 1 minute, I probably front run the high because if it takes the new high out, it invalidates the move. Yeah. Where? This one? Why? Oh, on this one. Oh, I didn't take this one. I'm confused. You mean on this where I actually took my trade? Yeah, okay. So what do you mean? Oh, under here, I'd put it about zero point 0.5 to zero point 0.7 underneath the high of the swing. But yeah, I think I put it at zero point 0.5. Well, at this point, what I don't want to do is this is way too much of a wick for me to say, oh well, I'll just put my stop loss like right here at a 2% down move. No, 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 no. Yeah, it's a good. It's a yeah, it's a very good question. So no, what I usually do, and this will, he has a little bit of a different system in that, but I generally look for a 3, 4, 5 to 1 risk reward. And with my stop losses, if I plan my trades out correctly, and I'll plot exactly what I had or have, that's my entry. My entry's at the swing there, essentially. So pretty much as close as I can get to the edge. I got partially filled, I think a little bit higher because I had some layered orders going into it. And then my stop was about zero point 0.5 below it. So let me see where that was. So somewhere around there. And then my initial target's the daily open. Oh no, excuse me, weekly. And then with that, essentially what I get now is an extra chance to get it because if it does do something like bounce there and then goes back and then pops the low, but then regains the level, I can try to re-enter the position and still make profit. Like that's the entire reason behind 3 to 1, 4 to 1, 5 to 1. This is even for me, this is a pretty low risk reward for the trade. Like the biggest problem that people have is that they don't do that. They don't use the thing to say like, well, okay, where am I looking for failure, right? Well, if you're looking for it to hold a level, like even that I thought was a little bit loose on the stop loss. Realistically, you probably want to target some actual structure. Um, that would be the best ideal trades, or that you get stopped out once or twice with a very tight risk reward. Something like that that only gives you a very small amount of slippage, but still like maybe 100, maybe it's like 20, 30%. And then what happens is if you get stopped out, it's no big deal. Yeah, you're breaking some structure, but you still have a chance of reversal if you regain the level, and then you get a bullish back test of what you lost. That's the whole point of risk rewards on trades, is that the only way this long is invalidated is what? It's a 4 hour close underneath the swing. Close, bearish retest. What do? Short that sucker to death. Short it to the low somewhere. Somewhere, probably take some profit before the actual low of what you have, because it can still regain it and create a higher low. If you get that, a failure of your level and then a bearish retest, that's the clearest form of invalidation that I have in trading. Because what you're doing now, like let's say this essentially does, we gain above, right? And we close and then we bullshit back test that. Like even if it's only there and it's bullshit back testing, that's essentially, we close above, bullish back test, you hold the swing. That's the continuation you want to come up and test higher, right? That's the invalidation of the short that was here. We didn't get it. We had multiple versions of failure. I even said it on the stream yesterday. It looks janky because we're holding the level that strongly. Wait for the 4 hour close. If you wait for the 4 hour close, you could have shorted it, knowing that you've lost the level, targeting stuff below it, targeting, say, you know, that and that, and then potentially even like below in the short. And then the moment it bounces back up, you can then like for BitGet, you have the ability to what's called a reversal. So you can press the reversal button and it'll flip your bias. It'll just sell whatever size trade you have and then re-enter the position in the opposite direction. So you can literally just ping pong. Dude, isn't it freaking awesome? Dude, I was doing that last night on like a couple things, and it's just like bang, a reversal, bang, reversal. I loved it. And yeah, when you're low time frame trading like that, it's important. But when you're higher time frame, like 4 hour, you have the time to plan your trade. You know, so when you see the failure appear and you want to say, well, we can still get a long, where do we have to hold for the long to be valid? The swing. So what do? You layer in your orders. You say, well, in case we front run it, I want to get some exposure, and then I'll take my stop. Your average entry if you get hit entirely, and then you have a continuation. That's the easiest way to do it. And the way you break that up is really simple. And you can do it really fast too, because what you can do is just say, well, I want to take the order size I want to use is, say you're using, okay, 5x, right? So, and I have $100. I want my trade size to be 100. So at 5x, my value trade will be $500. So what do I want to do with that? Well, I then we'll pop in a limit order. I'll type in, say, 26K, because there's no chance 26K is going to hit really fast. I'll just, $20 order, and I'll hit it in limit entry 1, 2, 3, 4, 5. And then with BitKet, you can just drag the orders and place them where you want them to be. You can do that in like less than 10 seconds. It's the fastest way to do it that I know of, outside of if you have macro keys and you have your own system. But usually those systems are a couple hundred K. Like to build an entire display API connection. Then you also have a heads up display as well that's custom to you. And you've hit macro keys where you can have like different buttons on your keyboard do different things, like chase entry. You can do strangle orders, which is essentially like automated market making for restriction, but that only is important if you're ultra high. If you're already a high net worth trading, like that's the stuff you need to continue making money and to keep you from getting liquidated. But like if you've got couple hundred K and you're trading crypto, you need to you probably need to start looking into like more advanced systems as far as like trading terminals, trading heads up displays and stuff like that. But at this level, like unless you're trading with like, 50, 100K plus sizes, you really don't need it. And to be honest, most people, it would be more detrimental to them because at that point, if you're trading with a couple hundred K, probably got 3, 4, 5 years of trading behind you, and you've built up a bag over time just doing stuff like this. And it's achievable. It's not unachievable for most people. The problem is always the same. Like TA is like 10% of the equation. And like the problem that most people have is that 90% of the problem is essentially, mentality. There's some luck in there as well because something, there are imperfect things. This is not a perfectly efficient market for trading. There are freak events, there are liquidity errors, there are things that make it, essentially imbalanced. But, if that's your mentality and that's your TA, like that's how we got to look at it, like learning the levels and the swings and understanding why price reverses and how we can say, well, oh, the volume is doing this, like, oh, bearish volume, we're going back up now since it closed back up above a significant amount of the volume, that type of stuff. Or even on the 4 hour, right, we got all of the bullish volume below us essentially in one spot, and then we're starting to bullishly diverge, even popped it early in this structure, and then we made a new low and then gained back above, like that type of thing. You have to use those tools with it as well, and that's why I think what we got works really well with the essentially the price action stuff. And the price action stuff is the most important thing. It's all that really matters. But Well, the thing with swings, and I'll that's a good point. Is that the thing with exactly? It's already been tested. It's already been done. That's the big thing that you got to remember is that once a swing has been done, it's essentially been done. So, what's the next level to target with this? What's still a valid level? Is this still valid? Yes, because we saw the reversal at 26.3, right? That's still valid. Is this still valid? Yes, but the more local one is more valid because that's already been done. The way I'd look at this is pretty simple: is that if you're targeting the upside move with the low of this swing already essentially being tested on the 4 hour, it was tested on the next candle. You still have the high of the swing because price was moving up, created a high, failed back down. Wonder if that's already done. No, not quite. So I'd say targeting for longs right now, if you want to be pretty cheeky, I don't see anything super clear on the 4 hour. I literally just see them holding the level since, this thing has been fully tested and new low created, which means that's not important. This thing is still relevant because it hasn't been tested. Yeah, he's doing the conference thing. He is speaking right now. Well, I mean, it is still like him just speaking. Let me see if I can. Yeah, it could be. Um, it's just so monotone and like, oh yeah, let me put it on real quick.
economy, and that the economy doesn't work for
Can you guys hear that or no?
price stability. Another is that high inflation is when we have high inflation, it is the responsibility and the obligation of the central bank to restore and sustain price stability. So today, while inflation isn't as high as it was when I was in college, it's nonetheless far above our 2% objective, and many people are currently experiencing high inflation for the first time in their lives. It's not a headline to say that they really don't like it. So we are.
Oh boo. Yeah, I'm trying. I'm trying to find it. No, these are all old ones. I don't know why. Oh, that's why it's your host. For some reason, Tilt made you host. Hey, Sonic. It's all jacked up. Yeah, I don't know why. Yeah, just exit this thing. This thing's. I don't know how to use this crap. Just exit it. Egil, can you exit the thing? Yeah, exit that. Exit that. Exit that.
I would sit on the front porch of their house and listen to my grandmother tell stories about her life. And she told about how she raised her family in Connecticut in the 1930s during the Great Depression. And it was a town that was specializing in shoe manufacture. And during the Depression, a lot of the factories were shut down. And she told me that, it was a very hard time. A lot of the kids went to school in tattered shoes or maybe no shoes at all.
Can you guys see that or no?
And I said, Grandma, why would they do that? And she said, well, because their fathers lost their jobs. Why did they lose their jobs? Because the shoe factory shut down. Now, I was only 6 years old, but I could see the problem with that argument. I said, well, why didn't they just open the shoe factories and make shoes for the children? And she said, it doesn't work that way. But I think it really was a puzzle to me that you had the same productive capacity in 1933 that you had in 1928. And in 1928, people were dancing to Charleston. In 1933, they were in bread lines. And that impressed on me, that economics can make really big difference in people's lives. And monetary policy is like that. I mean, it's, as Jay, of course, and all of you well know, that the decisions made in this building have a very broad and real effect on people's lives. And for that reason, besides its intellectual fascination, it's worth studying and understanding.
Thank you. I know that's certainly a key motivation for many people in this room to be working so hard. Okay, let's now turn to some topics of more current interest. And I'd like to start with the nexus between the financial system and the macroeconomy. Both of you, during your tenures as chair, have faced very significant historic financial crises. Ben, obviously you confronted the global financial crisis, and Jay, the global pandemic. Those episodes were clearly acute, very vivid examples of the connections between the macroeconomy and the financial system, as well as, I think, a good illustration of the role of central banks in such episodes. But Ben, your research, importantly, and the research that you have inspired, has really demonstrated that understanding the connections between the financial sector, credit markets, and banks and the real economy is critical for even understanding traditional business cycles. So with that as background, we have just experienced a period of stress in certain parts of the banking system here in the United States. So I want to get your take on those developments, how you think they match up compared to some previous episodes, and what they might mean for the economy.
Well, in some dimension, the recent crisis has followed the standard sequence. I don't know anything about Silicon Valley Bank other than what I read in the paper, so please don't misinterpret this. But it was a classic situation where they had assets that were subject to risk, and in particular, as interest rates rose, the value of their long-term assets fell and their capital fell. They had hoped to hedge that by their deposit franchise, where as interest rates rose and interest rates moved more slowly on deposits, that would partially compensate, but they were dealing with customers who were very social media savvy, and that didn't really work. So,
Okay, well, he's not really saying much, so I'm not gonna. Anywho, I'll just go back to it. Dude, and that's the problem. It's like, at the end of the day, they're safe from the whatever policy they put in place. The people they know are safe. But what kind of, I mean, they're acting like this crisis is over, and that's what has me a little bit worried. Is that, like, show me where the crisis is over and banks won't still continue to collapse. Like, oh, in the previous crisis of the banking crisis, like, you just had the number, like, the second and third biggest bank failures in like the last couple of decades. essentially. And I mean, geez Louise. Yeah, it's not set in stone yet that it's over. I'd be much happier with stuff like this was like gaining structure to come back and retest stuff. But the problem that I have is that these banking corporations are trading like shit coins. That's the problem. Yeah, and like that's the reality of what's happening, and nothing about this is saying, "Oh, we've recovered everything," and like we're going back up. It's like, where? But you know, the macroeconomic thing is very simple. This is still ongoing. There's no evidence yet. I mean, there are some great levels for some of these banks to come back and survive. Like even like Zion's, like gain April Q2, like one of the clearest weekly restrictions of levels that I've seen. You gain $30 and you have a continuation move up. Where do you target? Well, you target the low, the level that you lost that led to the low. And that's all the way up here at like 45. Like you can make some major like TradFi plays. Absolutely. But until you have the confirmation, you're just making new lows across the board for most things. There's one like in Sweden that everyone's losing their minds over, which is SBB, which is no SSB. No, it's SBB. Yeah, this one I've been playing this one because this is funny to me. But yeah, major building organization absolutely collapsing. A lot of people losing all of their accounts and something like this. And I've been playing this with a couple Swedish buddies. It's freaking hilarious how well it just failed everything. But I mean, yeah, essentially, like this is the reality that people, not even just in the U.S. but in Sweden and across the world, are dealing with, and I think it's funny. Well, not funny, but it's like I don't know, it's a weird one. I want to see a bouncer. Not great. It's holding the level it's supposed to hold, though. I even plotted that wrong. There you go. Boom. It's held exactly what it's supposed to hold. There's still hope, but you gotta, yeah. But like with most of these things, what's the cut? What's the where? I mean, treat this as like it's the 1 minute time frame. And yeah, it's gonna be weird looking because there's break in session and stuff. But like, what really matters? Let's look at the level that we lost that led us to the low. Essentially, that, right? Somewhere around there, the July Q3. You can make arguments on a weekly time frame for stuff like this, which yeah, it just kind of nuked through it. But it's pretty high up above us. That's a significant low compared to the overall structure. And this whole range, and this whole box, right? Where are we testing? If this whole thing is a range, this whole yeah, mid-range test of the low. That's good. That's pretty natural price action for the fact that it's failed miserably. Have we lost the low there? What about this low? Did this low test stuff? Higher time frame? Yeah. So it's still on track to continue. Like it even tested the swing here pretty cleanly. So it's doing everything it's supposed to do, like even all the way back, and that's good. But does this give you confidence, like making new lows, that it's failed and it's done, like it's going to move back up? Well, yeah, if it closes the weekly out, if it has in the next 40 minutes, if it closes the weekly out bullishly and actually gains structure back, I'd be much happier to buy a regain of April Q2 that does something like this, because then you're gaining the range back essentially. And that April Q2 range is essentially almost exactly the high of this range anyway. So now you've got some major levels higher time frame to kind of target. And this is the weekly. So I mean, if your outlook is a couple of months, does that play out on the monthly? I mean, yeah, it plays out pretty damn well. So what's the level to gain? Yeah, I mean, this is essentially doing like its own version of the COVID dump, and that's what they're all doing. So macro, I mean, it's still anyone's game. Like it still can do whatever you want it to do. Oh yeah, sorry, 4 hours and 40 minutes. My bad. My bad. Yeah, I was. But yeah, I mean, is that how fast the price is moving? Yeah, dumping hard. It's been dumping since the day opened. So that's no, it just tells you that, we opened above the level. So what do you have in this local area? If this is the local price action zone for stocks, and stocks do trade differently from crypto. They're not exactly the same, but they're pretty similar. If we can say isolate that as a major deviation and just take it from like the highest of the low, right? From there to there. We broke outside of the range, move to the upside, right? Anyone who had the longs, essentially anywhere in this area, they got the longs in. What do you do when you open a session out above a range? Take profit. That's why like in the first 3 minutes to an hour after we open in the mornings, you can still see reversal after that open. Like with this as an example, what you did was you closed up you close like after like you closed within the range after hours. After hours trading push it higher, and then we open the session higher than the range. So what's everyone doing who's long anywhere in this lower kind of half? They're all taking profits, right? If even from here, let's say you're long for the weekly, 10% profit on a stock, like something that's tradable, like as a banking ETF, you're damn skippy. You're taking profits. But that's a lot of times why that happens on stocks is that people will trade it just based off the sessions, and after hours trading, essentially, isn't as important. And you can change that. Regular extended hours, you'll see a bit more clearly. You know, extended hours. Yeah, we closed back above. The daily open happened. If that's looking at the 24-hour period. So from the close yesterday, we closed poorly, popped back up, opened here, opened at a high, and then went back down. This is almost essentially like a swing fail. And then this whole structure here is testing like these lows, essentially, this structure, all of this stuff, and bearishly retesting it very badly. So the only thing that matters now, essentially, is because I'm looking at the extended trading hours, which isn't the most relevant thing on stocks. You shouldn't be looking at that. Um, yeah, essentially gaining that level. Come retest, and then retest, and then I mean it's already tested. So what else do you have untested? Probably a lot higher if you see a gain of the level. Oh, I wouldn't doubt it. Not one bit, man. Absolutely. But looking back at like swing stuff, any questions on this? Any question on some indicator things? And also on my side, I can't lock anything yet in for Fireside. I know it was a bit ad lib off the hip. I had some time today, but it's like whenever the kiddo comes, yeah, yeah. But here's the thing too, and it's like people try to conflate the two things. They miss kind of like the macro perspective of the markets. It's like, well, wait a second, why is crypto having up and doing higher low technically on a low time frame, but then you look at like the NQ starting to fail a little bit. ES had a bad wick down, could have a continuation. Well, it's because we're in a transition year. Next year is the happening, and that does affect the market cycles, right? That's the truth, is that it affects the market cycles. Yeah. And even here, also, when you're looking at retests of stuff, if you're looking at lower time frames, you can also take previous swings, because previous swing structure, you can start also seeing out like the high time frames, looking at the absolute high and low in the zone, like the low, and then that was the high, and now this is the local high, that type of stuff. The reason it's important is because that's where you're going to see the major reversal potential or the loss that takes you a continuation. Intra all that, you can still use things like, well, what about this? Why is this important? Because we wicked down to test previous structure and then we made a new high after. How does that affect the rest of the market? Is that a pretty significant level to hold? Yeah. Same thing here. It's like, what happens if we wick down and like fail a level? Or like we made a low here and then we had a wick up to fail a level. Right? Is that not becoming important structure? Like holding level, gaining structure? Yeah, you can use it as such, but it's a lot less, accurate, even on low time frames. That's why sticking to the big stuff like that and then looking at, well, there's some price action block here, right? Because we're seeing some pretty big flip a level, essentially. Pop above, close below, bearish retest, failure. Bearish retest, failure. Bullish, bearish retest, failure. Gain. Do we have a gain? No. Bullish retest, continue. Bullish retest, close below, nuke. Again, it only works for such a short amount of time. Like you'll catch it a couple times when you can isolate those kind of swing levels, but the lower time frame you go, the more dangerous it is. And then, looking at stuff at like the 3 minute and like the 1 minute and things like that, I mean, you can just become brutal. I mean, look at this. Look at like the 3 minute. Like, what do we do? Oh, we blew past everything. So what's the important level now? Well, the important level now is the reaction there. To see what happens. If we even get back up to. And you can't really count it. We've already bearishly retested the high of the high on the 1 minute and the 3 minute, the same thing. What happens if we gain above? Well, you continue. But again, like I don't recommend the low time frames for anyone. They just they hurt. They hurt most people. Anything else on indicators and stuff like that? Still closing bullishly. If we start having a bad candle down, you can see if you can start losing some of the volume to go lower. Well, yeah, essentially what you do with the volume candle is that you're looking at where the volume is in the candle. It tells you like where the volume is in the candle overall. So like that's the majority of the volume. Where's the center of that volume? I mean, that type of stuff. But essentially, if that's the majority of the volume of the candle, what would be bad as far as bearish? Well, if the candle, you got 2 minutes, 3 minutes left, if the candle were to then close underneath the volume, that means all of this upside volume is now out of position, essentially. But the further low you go in time frame, the less reactive, because it might be very different from like the higher time frame to the lower time frame. It's still very helpful low time frame for scalping and stuff, absolutely. But like here's a great example in like the previous hour, right? Bearish volume is below where the candle closed. Yeah, it takes time. Like I've been playing with a lot just to get really good with it. But I mean, anytime you have essentially, bullish volume, but the candle closes below the bullish volume, you look for a reversal. Bearish volume, but the candle closes above the bearish volume, you're looking for a reversal. What happens if the candle closes here on the 1 hour? Well, you can look for a little bit of a comeback potentially to go lower. But with using this, the best thing that I found, if you're trading alts or things that are pretty high volatility or not high volatility, high volume, because then people will get caught out of position and there's less a chance of getting destroyed by a freaking market maker or a whale. Painful. Yep. Did you have your stop and profit? That's out of position. Yep. You can. Wouldn't bet on it though. I mean, now you're at the level. This is the point of control on volume as well. So for that to happen, you want continuation. Otherwise, you're at a potential reversal point as well. It gets. It's. Oh, it skipped you. That's a nicer spot, or no, you're on perp. So yeah, and it will be different on based on your exchange. Absolutely, but you have to play it off your exchange. Yeah, there you go. Look at that on the 15-minute. That's the block you don't want to gain above. Does that play out as far as swings and such? Yeah, it's a fully tested now. So there is still a potential for continuation up. I haven't looked at funding rates today, actually. I feel bad about that. I feel dumb, bullish. Hmm, hmm, funny. Yeah, I don't know if he's mentioned anything about interest rates. Yeah, I think they're just shooting the shit, and people are just expecting it. Yeah, but geez, sometimes this stuff is just easy. One, two, three, four. Giving you a lot of potential liquidity grabs the upside, which means it's still could fail. but needs to lose it in the next hour. Start losing under the block like 685. Dixie's dumping, baby. Well, it's at the level to hold. Yeah. Yeah, but that's the whole that's the I talked about it a couple days ago. It's like that's the scary part of the local structure. There's these times when they become like disjointed. So I want to see essentially is the loss here because it's perfectly back testing levels like that, and I want it to go higher or go lower if it fails 1029, but it's perfectly testing it. And this thing is very, very overbought on like the 4 hour and then stuff like that. So I'd love to see it come back down to like this area before the end of the day. Then we get a little bit upside move and then we'll reassess Monday. If this is the bounce here, it just means it's holding structure strong. That's all it is. Just very, very strong bullish structure. But I need to get going. I have to start cooking some burgers. Oh yeah? Yeah. That's funny. Yeah, it would be nice. It's a smart idea. You get to keep all the money they throw in the casket.